Hi, I'm Sophia Song, Head of Research at StreetEasy. We've just released our fourth quarter market report, and this quarter the report revealed significant findings regarding low inventory, high contract activity, and stable median price. We're here today to talk about these findings with Nancy Pax, a local real estate authority and consultant to some of the city's most prominent residential real estate developers. So, jumping right into things, one of the most notable real estate stories for 2012 was the incredible decline in inventory. And right now, what we're seeing is that inventory levels are actually just about where they were at spring 2008. What do you think is causing this?
Well, we had tremendous inventory coming into the market just before the top of the last cycle. For example, during 2007 and 2008, which was the top, we had about 8,000 units per year of new condominium development in Manhattan. That was about half of all transactions. That inventory has gradually been absorbed. We've had really very little new inventory. So 50% of the market isn't there. In the resale market, you have to think about what motivates people to put a home on the market. Typically, they want a better location or a larger home. The trade-up today is very expensive.
Over the course of the year, like as you mentioned, we've seen a gradual annual increase in price of roughly 2.5%. What we've also been seeing is that there have been fewer and fewer price cuts, and properties have been staying on the market fewer days. Do you think all these trends are indicating that the market is in true recovery, or is it something else?
The nature of the average participant in the market, their earnings, is less than it was before the change in the market that occurred with the last cycle. So earnings are, on average, not as good as they were. The growth in the market really is about the fact that we have tremendous foreign capital coming in and very, very affluent people. That group has really created the movement in the market in terms of pricing. But when you look at the average part of the market, we don't see the kind of price increases that one would expect in a recovering market, because earnings aren't there and people don't believe that the economy is going to get much better because of lack of interesting job creation initiatives and the terrible new tax deal, of course, that will take money out of people's pockets.
We've seen a lot of activity in the entry-level market and the luxury market, as you mentioned. For example, we've seen a 37% year-over-year increase in the number of contracts for one-bedrooms. And for the 10 million plus category, we've seen an increase of 140% in new contracts just this last quarter. Do you think for 2013 we can expect to see the market become less fragmented?
So there's less inventory, great demand, and that part of the market probably will be very resilient. But the heart of the market is the two-bedroom family purchaser, and they're not doing well right now, and I don't expect to see a big recovery in that market. That's also not the foreign investor typically.
So just last week, Congress passed a deal to basically avert the fiscal cliff, but there's still going to be higher income taxes and higher capital gains taxes across the board. And additionally, there's going to be a 2% increase in payroll taxes, meaning people are going to, take home fewer dollars, and it's going to be more expensive for sellers to sell their home. What do you think this will mean in terms of the real estate market for 2013?
Well, the only good part of it was that it averted the uncertainty about being able to pay the bills. But of course, the actual changes in this tax law are taking money out of everyone's pockets. And that, of course, hurts all gross domestic product. Our economy is premised on consumption. 70% of the gross domestic product is consumption. So when we take money out of people's pockets, it hurts everything. It hurts job creation. It hurts the real estate market. We're missing that part of the program that creates jobs and creates jobs that pay more money. And until we address that, this program is not going to help the economy.
Thanks so much for watching, and be sure to check back for the next video on our fourth quarter market report, where we discuss new developments with Nancy Pax.